All right, we're coming to the end. And if it helps or matters, I'm not hungry. So it's like 10 a.m. on a Friday. And here I am. Okay, in this video, I am going to describe vertical analysis. And it is fairly straightforward. Okay. These formulas, I never really like these formulas. Vertical analysis, what we are doing is we are going to present the balance sheet and the income statement in terms that make them comparable to other competitors or industry participants. And it helps us compare companies if they are of different size. So what we call vertical analysis sometimes is also called common sizing. Okay, so what we typically do is we identify a base, and when we're looking at the balance sheet, that base is usually total assets. And then we present everything else as a percentage of total assets, right? So here in the current year, I've got 48,844 in cash. And so what we're going to do is we're going to say, hey, you know what? 48,844 divided by total assets of 338,516. That's going to equal approximately 14.4%. So what we're saying is, hey, you know what? Cash and cash equivalents is about 14.4% of total assets. And then we can go do the same thing. Total current assets, right? All of my current assets are about 48% of total assets. And then I could do the same thing for all of my liabilities, all of my equity, right? It could be the case that you're presenting it as a total liabilities and stockholders' equity. There's no reason why you couldn't show accounts payable as a percentage of total liabilities. That's okay as well. But if you're making comparisons from one company to the other, and you are using total liabilities as the base, you just want to make sure that you use total liabilities for our target company as well as total liabilities for all of the other companies as well. Okay. So that's common sizing vertical analysis for the balance sheet. And again, it gives us an opportunity to identify areas that we want to investigate, right? So if there's a substantial amount that's tied up in total assets, like our current assets are 48%, maybe it would be the case if our total assets was 80%, that would be something we would want to look into. And again, depending on if our total current assets were 80% of total assets and all of our competitors were something vastly different, we would want to know what's the explanation for the difference. Are we doing something that's inconsistent with the market? And is that good or bad? Okay, we can also do the same thing for the income statement. And usually it's the case that net sales is always the base. And so we would present everything else, including net sales actually, as a percentage of net sales. So net sales as a percentage of net sales is obviously 100%. Then we can do gross margin as a percentage of net sales, and that would just be 98,392 divided by 260, 174. Obviously, we have to multiply it by 100 if we want to determine the percentage, but you do that formula and you're going to get 37.8%. And now I can compare my gross margin to a competitor's gross margin. And that competitor could be substantially larger or substantially lower in size. And the percentage of total sales would at least give me an opportunity to say, hey, even though we are a smaller company or a bigger company, we are at least moving at the same pace as some of our competitors or some of the industry standards within our business, right? That is vertical analysis. Data visualizations, right? Again, it gives us an opportunity, right? We can take some of those percentages and we could put them into visuals that help us, again, tell stories, identify things for investigation, compare our results to our competitors, so forth and so forth.